We have decided to do a UK Brent opportunity and the Aussie CAD yet again. Now, the Aussie CAD at the time of analysing the markets this morning was actually looking really good. Primed, ready to go for a short, just awaiting the break of structure point. Good afternoon, ladies and gentlemen, and welcome to this afternoon's Markets Now session, where we are breaking down this week's market report and everything that's going on from an economical, geopolitical, and fundamental standard. Hope you're all doing well, guys. As always, hope you had a great weekend out there as well. Good afternoon to you inside the trading community. Good afternoon to you on the outside of the trading community out there on YouTube. Just want to tell you guys, lots going on at the moment. Have a great trading week, of course. I hope it's all going well for you, and good luck with it all. So if you do want to gain access to this week's market report, it is inside the trading community. So please, if you haven't done so already, come and join in, download your own copy, and get these market insights as soon as they land. Good afternoon to you, Cora Tim. Good to see you, buddy. Good afternoon to you, Jack, as well. Good to see you, man. So let's get rolling then. So first of all, we've got the asset exposure list. We've got the portfolio breakdown. Last week, we had 45% market exposure in the US indices, followed up with 35% in the FX space and 20% in commodities. We had a relatively decent week. I've just realized there is a typo in this report. That's last week's realized growth. We had a 2.43. This number in here, not 6.81%. I'll have to have that edited and resent out to you momentarily. That's fine. But we had a 2.43% week last week, which was pretty good. It's definitely not great. It definitely wasn't the week that we had before, but it was pretty good. We managed to weather the storms for the most part, and ended up with a really blinding Friday from the CPI event, which essentially saved the week for us. I mean, we had a 1.6% Monday, a 1.4% Monday, and then Tuesday, Wednesday, Thursday, we were in a drawdown for those 3 days. Nothing major, but we had a 0.2% day on minus 0.2% day on Tuesday, 0.05 down on Wednesday. Thursday was a 0.25% drawdown. So, it's probably about a 0.5% down. And then Friday we came back strong. And that was predominantly across the CPI trading event. But also we ended up landing our Aussie CAD position, which was really nice. And the Aussie CAD long. And we also got another one as well. And I can't remember from memory which one that was. But it was a trading opportunity that we'd had running for a while. So it was nice that both of those came in to land in the bag before the weekend was here, which is really good. So that was that. In terms of the portfolio metrics across the year so far, not really too much has changed. The risk reward dialed down by 0.1. Weekly percent dialed down by 0.1. Monthly was unchanged. The yearly, obviously, at 135.82% so far. Very modest gain last week. The October trading volume so far, the shorts are accelerating away from the longs. We really are, losing the steam in the longs. We're shorting the market a hell of a lot more at the moment, which is, I have no idea why. It's just the nature of where we are at the moment, I suppose. And against the rest of the assets, the UTCF fund was pretty average. We did a 2.43% gain versus the S&P, which is almost the same. And the UK FTSE outperformed us quite significantly, actually, at plus 3.08%. Now, moving down into market trends and opportunities this week, we have shaken things up a little bit. We've gone for silver rather than gold. There is a reason, and I will explain it in a moment. We've gone for the UK FTSE rather than the DAX or any of the US indice trading assets. We have decided to do a UK Brent opportunity and the Aussie CAD yet again. Now, the Aussie CAD at the time of analysing the markets this morning was actually looking really good, primed, ready to go for a short, just awaiting the break of structure point. From that moment on, we've actually risen quite significantly to then go for a potential breakout of the top of the range. So this might be completely invalidated before it even began. We will, of course, cover that in the sessions throughout the coming sessions over the week. But at this stage, yeah, it's neither here nor there which way this one's going to go. It's at a major decision point right now. It may end up finally breaching the high and going for it. As we all know, especially if you've been trading with me for a long time, you will naturally understand that the longer a range is in motion like this, the least successful, the least likely it is to continue. And that is simply where commercial inflow continues to take place. Orders are continuing to go into the market. And it's just a matter of time before we get the breakout, which is where the commercial institutions then push on for their next leg, north or south. So we've been in this one for quite a while now. I mean, this is the daily time frame. We first broke into the range here, and then we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 subsequent days inside the range. So that's quite the established range at this stage. Now, ranges can last for a significant amount of time. They can last a lot longer than this. But I think this one is probably going to get ready to set and take off. So we'll have to be aware of that one, see where it lands. Now, in terms of the UK FTSE at the moment, we've got this beautiful breakout, really, really nice, big, extravagant breakout. We've come up here, we've closed above really nicely. This week for me, it is about retest and continuation. Now, it is such a great breakout on the UK FTSE, and we have such an awesome level of inflection to the left-hand side. I think it's just a matter of time, right? I don't see, especially, look, I can kind of get past it with the US indices in that there are so many reasons why they're bid and so on and so forth. There's a lot of reasons why they're not, but you also have to take, there's also obviously a point of, how can I say this? There is an element of corruption behind the US indices, like there are all indices, but there is an element there that you cannot ignore as well, in the fact that they continue being bid against all of the odds. So there is that. But fundamentally speaking, the US indices obviously seeing a huge bid as well and a continuation because of the CPI softening, the interest rates finally beginning to come back down as well. There's a lot of fundamental reasons why they would be bid right now. The UK FTSE is less affected by elements like that. And so therefore, I still very much stick to the fact that we will see a retest and continuation as a result of the big breakout that we've just recently had. So this week's market bias is to see a nice big retest to that point of inflection, possibly with the opportunity for us to take a short and profit on the way down, and then to bid back in, to buy back in at the lows and ride it back up to the previous high, which would be a double opportunity for us. So I'm really hoping that one takes place. We'll have a look at the UK FTSE as well, just to check that one out. But it's looking pretty decent. If we go down, we've got UK Brent down here as well. So this one's a bit of a mixed bag this week. We've got the potential for a rejection from the previous high for a continuation. So this would just be a very nice sort of trend continuation, retest continuation from there. Similar in a sense to the UK FTSE, we have this point of inflection back here. We got the nice break close retest before we get the continuation to the downside. We get the big pump up. We get the secondary break of structure. Now that we've reached this point up here, which is actually from there on the left-hand side, another really nice point of inflection. I think we could indeed see the retest of that level before we get the continuation on. And then it's at that point in here, which is where the decision will be made. And that decision will be either we break out long or we continue going short. We get the break close retest. And then possibly by next week, we could look at the continuation back down to the previous lows. Now, that's not my bias per se. My bias is just really locked in up until this point. So that's really where my bias is. And then from that point on, we just have to simply be reactive to the market and await the necessary process to see which way it's going to go. And then finally, we've got silver. Now, you may be asking why are we looking at silver this week in terms of the main the main sort of metal, the main precious metal opportunity. The reason being is because we have a damn gold long already in the market. So we can't use gold again because if it's already live, it's already running. It's not doing too well at all, by the way. It's actually come down very, very close to stop. I think it's still ongoing though at the moment. I haven't checked as of the last few hours. So yeah, it's still there at the moment, it's still running at the moment, but it's not looking great. We've got a break close and a retest happening at the moment of liquidity. It's currently trading at 40.27. We are not far away from the edge of the end, so at the stop loss. It's been defended at the moment several times by a point of liquidity, a point of inflection down at the lows. It's a stone's throw away from that one at the moment, and the stop loss is situated directly behind it. So yeah, I mean, it's still pushing down now as well. So we're not too far away. It's a real shame because it did rally and it did go really nicely. We got to a high, I think, of around 41.57. It was looking great. Unfortunately, it's just collapsed. It's not looking so good so far. So we'll have to wait on that one. Silver, though, looking for the potential for an instantaneous buyback, and that would be via the breaker structure here to take the trading opportunity up to the high, or alternatively, a continuation lower back into the lower side of this point of inflection here, for then the continuation to be bid back from there. Now, this is no means a major point of inflection that I'm looking for the turning point in the market. It's just the fact that there's been commercial interest here multiple times before, and there were orders filling into the market down at this level because thereafter we got the big breakout and the continuation. So there had to have been money down there. So that's kind of what I'm riding on here. And of course, again, we cannot ignore the fundamental analysis here. Fundamentally, I'm still extremely bullish precious metals. Still very, very much so. So we'll have to, again, be reactive to it, await the necessary process, and carry it out as and when. So moving down into market challenges this week, as you guys probably have seen from the economic calendars, it's a really big week this week. It's a very different week than the ones that we've had over the course of October so far. We've got the BOC interest rate decision, which kicks things off, and that's on Tuesday. Then we've got the big Wednesday federal interest rate decision, which is where we're looking at the Fed potentially cutting 25 basis points again off of the base rate. That would bring us down to 4%. This would clearly lead to an alleviation of pressure on US stock markets. We would naturally see quite the bid in the US stocks. We would see the US dollar come down. We would see gold rally as a response to this. So there's a lot of moving parts at play at the moment. Probably going to be a lot of decent money-making opportunities this week as well, regardless of if we take the hit on gold today. We could definitely look at a return of that capital to us by week's end. So I am looking forward to that one. There may be a live event for this one yet again. I know the time was quite awkward for everybody last time, including myself. It's not an easy one to pull off here in the UK with it being so late. But leave it with me. I'm looking at possibly running that one again. So at least even if you guys can't make the actual event in the evening, you will be able to get it on catch up the following day. And then on Thursday, directly behind that, we have the ECB with their own interest rate decision, and that one's coming in at a 4 out of 10. So not quite as hefty as the others in terms of what we've got going on in the markets at the moment. But still hefty enough. And then finally on the Friday, we tie things up with the US core PCE, and that's the month-over-month PCE data release. So it's quite a good one. We've got a mix of things going on. Obviously, Canadian dollar volatility. Looking at things in oil, probably taking a bit of a push or dump as a result of that one as well. We've got the federal interest rate decision. Obviously, that's the elephant in the room. And then we've got the ECB, and then we've got the US core PCE, and we've got these events taking place periodically throughout the week. So it should be a nice sort of scene where we can see things, building into the markets reacting. Every single day we've got one of these big events that are taking place in the afternoon. So it should keep things sort of flowing along quite nicely. And finally, on this specific page, we've got the State Structure Volatility Index. There are no notable call-outs apart from, I would say, the silver one that's at 63.29%. Now, of course, we didn't run silver last week, and so I didn't have the actual print for the commercial long versus shorts data. But I don't think it would probably be as high as that. So 63.29% commercial longs, quite an interesting number. This, even though it looks very simplistic in its form, is actually so powerful. And a lot of the time, when we see these outlier numbers, not generally like the necessary. I mean, 42.1% long in Aussie CAD. I suppose that really is kind of a notable call out a little bit, but not hugely. When I see 47% in Brent or 55% in UK FTSE, this is just well within the mean. Not really anything to be too fussed about. If I see 63.3% commercial money is long in silver, this really gets me excited. And very often we will see the market rally as a result of a number like this. So I'm looking forward to seeing what silver has in store for us this week. And finally, we go down to the economic and order book impact report. So this is the broad market impact across the totality of the financial markets. We've got BOC interest rate decision coming in at a whopping 3 out of 10. The federal interest rate decision event this week is showing at a 10 out of 10 on the impact scale in terms of broad market impact. This is looking at every single asset class, bond, you got your fixed income markets, equities, indices, FX, futures, everything. So very, very big and highly regarded event this week in that one. We are definitely looking at some major volatility coming through the baskets for that one. So yeah, we'll all have to be ready and raring to go on Wednesday. And then ECB rate decision is looking at a 5 out of 10. And then we've got the US core PCE, which is at a 4 out of 10. So that's actually not too bad. In the broad market impact scale, this is actually probably more volatile than the BOC this week. So that's what it's showing us anyway. So we'll have to wait and see how big that core PCE one is. Now, as we go down, we have the multi-asset impact gauge. Ultimately, the FX market taking 50% of the total impact from the news events this week. That's pretty much in line with what you would expect, I suppose, thinking about what currencies are and what they do. Looking at the money flow trends, nothing really here that's notable either. Exactly the same as it was last time, I want to say, or maybe like a couple of percent different. Again, there's not really any notable call outs. I suppose commodities at 61% bought is quite a big one. But if we think about the cyclical event, we're coming into cooler seasons, oil, natural gas, other refined commodities like that probably going to be rallying up as a result of fuel demand for various equipment, things to keep you warm and things to keep you on the road. And then we've got equities in the focus. Now, we've got a bit of a mixed bag this week. Some of them not so interesting. SG, which was honestly just put in there just because it looks all right. SERB is actually looking really good at the moment, so please do check that one out, 68%. And we've got Amplitude. Now, Amplitude stands out this week. It's a small cap player. And it's in, you guessed it, AI, which almost everything that seems to be bought at the moment is in AI. But nevertheless, it is looking very strong. It has got some good numbers on the sheet, and it is worth a look. So please check that one out as and when you can. And then finally, to tie it all up, we've got the institutional buying interest by sector. We've got tech, financials, energy, and consumer. Exactly the same as we did last week, but we've had an increase in some of the money in some places. So another 3.6 billion capital inflow on technology, but consumers dropped down to 1 bill. I believe energy and even financials have actually dropped down as well. So the three have actually dropped down in their capital inflow, but they're still holding the same place. Whereas technology is just being absolutely pumped full of greenbacks at the moment. So you want to make some money in the equity markets, look in the tech sector. It's really that simple. And finally, ladies and gents, if you can please be kind enough just to listen to me explain this amazing thing at the bottom here. This is called a disclaimer. And it says, the information provided in this market analysis report is for informational and educational purposes only and should not be considered as financial advice or a recommendation to trade or invest. Trading in the financial markets involves significant risk and may not be suitable for all investors. I know you've never heard one of those before, so there you go. It's your first time. Now, let's break it down in the chart. That is pretty much it there for the market report. As I said, it is free, it is open, it is yours. All you need to do is join the trading room and you are happy to download your own copy. And just to make you aware, you can join the UTC basic package and join the trading room for free, just to get a feel for what we're about, what we're like, and to obviously benefit from these market insights like this. So please go ahead and do so. Let's head over to the charts then, see what we've got going on over there at the moment. If anything, of course, I'm well behind the curve, as we all know. Let's pretend that just didn't happen this year. It always happens. It always happens. All right, let's check it out. What's going on? Oh. No, not that. There we go. All right, let's check it out. So, yeah, that's where gold is, by the way. It's it's sort of hovering just above the stop loss at the moment. We'll have to wait and see where that one goes. The Aussie CAD here as well is gone for a little bit of a breakout attempt above the big daily top. At the end of the day, we won't be looking to trade this long regardless on a 15-minute time frame, because the break, close, and retest will have to happen on a daily just because of the gravity of the size of the range that we've been dealing with. But honestly, team, the amount of times that I've seen the market fake out on ranges like this, we have a little bit of a dip up, we come back down, we run all the way back down to the ground. It does happen. It happens frequently. So it's definitely not out of the, we're not out of the opportunity yet. It could just, we'll have to see how we look over the next 24 hours or so. Right, let's check out the US indices then. So far, US 30 Dow Jones is going for a gap fill. Actually looks really nice. It's not making me feel any better about missing this afternoon, because, that's a pretty damn clear trading opportunity, isn't it? So we've got this high down here. We've got that breaker structure up there. This is the gap is actually to here. All right, so it's down there. That's where the gap fill needs to go down to. I'm thinking though, have we already had a retest? No, retest is underway at the moment. So what we could look at here is a retest of the level that we're looking at currently, and then the follow through down to 47.34. Looking at this at the moment, we could even use this level in here as the breaker structure and still get a relatively decent trading margin out of it, right? Entry, target, stop loss, 50%. The margin, 1 to 2.23. It'd be tight, but it's definitely doable. We've come back up for the retest of liquidity now. Market looks like it wants to have a continued stab at the lows. We'll have to wait and see. I don't really see too much opportunity on the upside here. Way too much stuff to get through, so I would have a bearish bias still. So I'm happy with that one. NAS 100 at the moment, that looks like a murder scene. Yeah, that's a nasty, nasty looking candlestick. We've got structural point down there. That's worth a shout. Too close to the breaker structure low though. Is it? I wonder if it is. Yeah, it is. Yeah, no, I'm not up for that. So we'll avoid the NAS 100 today. S&P 500, which will be very, very, very close to the NAS. Wow. Okay. So we've got breaker structure low. We're nowhere near it at the moment. I tell you what, team, that is one hell of a trading opportunity in there, isn't it? We wouldn't even have to get anywhere near the full gap fill in order to pull off that trading opportunity. Short. Target. Exit. Even with a really healthy stop loss, you're still looking at a 1 to 3. I'd probably have it even a little bit further up, to be honest. I'm at 1 to 2.8. Yeah, I'm going to have a 1 to 2.8. That's actually super nice. We're up 0.89% so far. This one could come all the way back down here and still be in the green. That's a hell of a big move, though, for a Monday, isn't it? We're trading up at 68.55 at the moment. To see it come back to 68.10, I'm not entirely sure. What time are we on at the moment? We've been in the market for an hour. Hour and 15 minutes. We haven't moved anywhere yet. Would there be more of an opportunity above this? that there. I'm wondering if we get the breaker structure below that low, could we then pull out the trading opportunity between these 2 points? I mean, that would be a 5... No. That's a 4 pip stop. What's my spread on this thing at the moment? The S&P 500 can be a bit funny sometimes. 0.4. Okay, well, that's not bad. That's not bad. Yeah, it's fluctuating as well, actually. Is it saying again? Yeah. 0.3, 0.38, 0.4. Yeah, that's fine. That's pretty stable. I mean, you could certainly pull off a 1 to 2 in there as well, couldn't you? So I quite like that one as well, team, to be fair. Do check your trading parameters around that, though, because sometimes people can find the S&P a bit of a funny one to trade with their brokers. Sometimes, not a guarantee. I'm really liking the longer term trading opportunity as well to the downside. I mean, that's such an amazing gap. And there's a lot of money potentially sat there for us. I mean, you'd be looking, I mean, that is the trading opportunity. If you have a 50% stop, you're looking at a 1 to 3.4, aren't you? It almost seems, a little bit too good to be true, I suppose, in that sense. A 1 to 3.2, I'll have that there. Possible intraday trading opportunity short in the S&P. But honestly, team, do pay attention to what's going on here. Because inside this, which is where the market's been open so far, has been a complete sense of disarray and confusion. The market doesn't know where it wants to go. There is no directional bias. There is just pure indecision. And when you find markets like this, the best thing you can do is to stay clear, to keep your money away. So there is that. We're not going to be looking to trade the NAS 100 at all. The US 30 Dow Jones definitely got legs on that little intraday trade down there for a 1 to 2.2. We'll just have to wait and see how that one goes. But yeah, that's not bad. That's not bad. I'll fire these trading opportunities out to you all literally in a moment as well. I'm going to get that digit updated on the market report as well, just so the fresh copy's in there, just for clarity's sake. And that'll be that. But listen, guys, that's pretty much it there for the session this afternoon. We have, I know it's pretty quick, pretty sharp. I do apologize about missing the damn US Open today. It happens every single year, like I said. It's I wouldn't be me without it. So yeah, that's pretty much it. Have you guys got any questions or anything? Any questions out there? No. All right. Awesome. Right, team. I'm going to leave it there then. I hope you all have a fantastic day today. Look forward to catching up with you later on as well. See how we get on with these couple of little trade ideas we've got in the US indices. Maybe we could get a little bit lucky. I mean, at the end of the day, it doesn't look like we've actually missed anything for not participating today anyway, except for taking on a few losses. So far, the market's looking incredibly indecisive, so probably a good thing that we haven't initially got into anything just yet. Have a fantastic afternoon. Like I said, look forward to catching up with you guys tomorrow as well in the next one, where we really dial it in and look to build out our portfolios with a few more trading opportunities. And I'll see you then. So take care, team. Have a good one, and I'll catch up with you later. Thanks a lot. Bye-bye.